Thank you for joining us today. I'm here with Keith Henderson, the CEO of Latin Metals, and we are going to talk about commodities. Keith, thank you for deciding to come on and share a little bit of your insights that you've had with Latin Metals.
Yeah, thanks, Alicia. I was just looking at this the other day and I thought this is interesting. I was looking at the trends. And so, we established Latin Metals as a prospect generator in 2019. And at that time, we made a particular decision on which commodities we were going to focus on. And we kind of settled on gold, silver, and copper. And if you're a Latin Metals shareholder, you should care about this a lot. And if you're thinking of becoming a shareholder, it's equally important. If you look at where we've kind of split our commodity interest, there's a pie chart on the bottom of the slide. So we're about 47% kind of pure play copper. We've got 16% copper gold projects, and we've got about 26% in kind of pure precious metals, gold, silver, gold type projects. So we really stuck to our guns in terms of what we had decided to focus on, and that's exactly where our projects sit. If you look at this table on the right-hand side, this is a superb website. It's called Trading Economics. And if you go on there and go to their commodity section, you can basically look back maybe 10, sometimes 15 years on almost any commodity in the world. So you can get kind of live pricing right now, and you can see what the trends are as well. And that's really great. I've highlighted here the bit I want you to look at, gold, silver, and copper. Like these are basically on a year-to-date basis and a year-on-year basis. These are certainly the commodities where you would like to be focused, in my opinion. And if you look at some of the other things like lithium, year on year, minus 35%, not so good. And uranium, which is a commodity I'm very interested in, even that is kind of year on year, minus 25%. So certainly gold, silver, and copper appear to be the right kind of decisions, at least in the last kind of 24 months, let's say. If we look at longer term trends, what I've done here is pull out gold, silver, and copper. On the left-hand side, the charts are 5-year charts. On the right-hand side, 10-year charts. Just to give you an idea of what the longer term trends are, the 5-year chart approximates basically to that 2019 decision that we took. And so this is what the commodity has done over that period of time. If starting with gold, obviously it's on everyone's lips. It's gone through $3,000 per ounce in the last few days. And I checked this morning just before you called me, Alicia, and 3,033 was the answer. So this is really great. It's exciting times. And this is strong commodity pricing is going to support transactions and acquisitions. An example from my own life, my other company, Velocity Minerals, we recently announced definitive agreements for an all-cash transaction, $59 million US for all of our Bulgarian assets, which equates to about $118 US per ounce on a reserve basis. So that's a good transaction, and it's supported by this fabulous commodity pricing. From Latin Metals perspective, we've got a lot of gold exposure, but I think we're particularly excited about Anglo Gold. Anglo Gold as a major mining company are focused on discovering deposits that are 5 million ounces or more. So really large tier 1 discoveries, and they're partnered with us at Organuyo, targeting just that. And they're really excited about doing it, and they're planning to be drilling in 2025. So this is, as far as gold exposure goes for Latin Metals, this is where we're focusing our attention at this moment. Moving down to the next chart, silver, clearly looking very strong, just like gold, but maybe with a little bit more room to grow. It's everybody's kind of next breakout commodity, which is, I think it's probably got some chance to be true. I heard Eric Sprott during PDAC speaking about $250 per ounce, up to $500 per ounce. Are those things true? I don't know, but certainly it's a strong commodity. So, from Latin Metal side, we're particularly focused on our exposure at Cerro Bayo and La Flora. We're hoping to have drill permits there very soon, and shortly thereafter, we're hoping to find a partner to go and drill those projects for us. On the copper side, in 2019, this was probably a tougher call. Copper hadn't really been looking so good, and it crept above $3 per ounce from time to time in the years previously. But in the last 4 years, copper's basically been almost universally above $4 per pound, and right now it's way higher than that and kind of flirting with $5 per pound. So that's really, really good news for copper. And that's basically electrification and its stability and growth in the commodity as a result of that. From Latin metal side, we've got Mexico working at Esperanza. And Esperanza is a discovery that Latin Metals made several years ago. We had 400 meters of mineralization from surface. It was 0.57% copper, 0.27 grams per ton gold. So this is a copper gold project. And we're excited to see what Mexico will come up with over the next couple of years as they try to sort of create the value there and do the testing. Also, in my own world, I'm also a director on a company called World Copper. Recently announced a transaction for $26 million cash for their Zonia asset in Arizona. So again, we see this kind of commodity strength is supporting acquisitions and various transactions as well. So we've got one more slide I wanted to just speak to quickly, and it's really the other commodities. So we're focused on gold, silver, copper. What is everything else?
Quick question, if you
Yeah.
sorry. With our projects, with it focused in gold, copper, and silver, in those ones that we mentioned, we will probably or potentially by 2020, end of 2025, have drilling on these projects.
Yeah, that's likely to be the case. I certainly think it's going to be the case with Organullo and Cerro Bayo. Probably also at Esperanza, like that's certainly the aim. And so that's a pretty interesting scenario for shareholders. We've got under contract right now between Organullo and Esperanza. We've got exploration commitments in these option agreements that are in excess of $80 million in total over the next kind of 3 or 4 years. And if we sign up another partner at Cerro Bayo, we'll only be adding to that. So it's a huge amount of dollars that are being applied to the exploration projects, and it's resulting in exactly zero dilution to Latin Metals, which of course is always our aim. So thinking about these other commodities, I probably won't speak to all of them, but maybe I'll speak to a few. Like iron ore is certainly a commodity that the world needs. We need it for steel, we need it for construction, we need it for all kinds of things. And in my past, I've had success with this. With Cardero in 2009, sold an asset in Peru, an iron ore asset for $100 million cash. So at various times, iron ore has supported that kind of transaction. And you see in this 5-year chart, you see a 2021 peak in pricing, but since then this commodity has really suffered and it's down more or less at $100 per ton right now. I don't pretend to understand exactly what drives the iron ore price. It doesn't make a ton of sense to me considering how much we need these commodities, but this is really not a place where I want to put Latin Metals right now. I just don't have faith that there's going to be a high enough commodity price to support the kind of projects that we would want to look at. So I basically steered the company away from it. Looking at lithium on the top right-hand side of this page, a lot of very smart and maybe some very brave investors went into lithium in 2022 and made lots of money through that year. Coming into 2023, the commodity price kind of collapsed and it's sort of stayed there. So this isn't a place that I want to take Latin Metals either. And while a lot of companies who got into this at the right time kind of did well, and a lot of shareholders did well, an awful lot of companies really blew up on this, and it blew up really as a function of these companies being solely focused on lithium. And if you're going to do that and then lithium doesn't work out, you're in big trouble, and that's why we've not done things like that. The last one I'd like to mention is uranium. I really like uranium, and we see that the commodity's been doing well over the last 5 years, but we also see that it's pulled back quite a bit. Right now, the uranium price sits at just over $60 per pound, and that's interesting because that's basically what we understand to be the average production cost in the world. So it's trading around production cost. With this kind of upward trend, I would suggest that uranium's going to lift again. It's going to see a bit more support in the market, and that being the case, I think uranium's a really interesting place to be, and I'm really bullish on the commodity in general. It's maybe something that Latin Metals will be able to acquire in over the next little while. We're certainly looking at some opportunities in uranium, although we've got nothing on the books just yet. But we've been talking about gold and copper and silver over the last kind of 5 years. And if we kind of fast forward 2 years, what's that going to look like? Well, I think it's still going to look like gold, silver, and copper, because that's where I've ultimately got faith. But there's certainly some possibilities that we would add something like uranium to our commodity mix, maybe as like 5 or 10% of the mix in terms of what the company actually has. And that's really all I wanted to say, Alicia. I thought it was useful for shareholders to see that, to see the decisions we've made, why we've made them, and whether we consider them to have been the right decisions. And I think as far as gold and copper and silver goes, I think we made exactly the right decision.
I concur on that statement. I think Latin Metals is a company to watch, as we have 18 different projects in, like we said, copper, silver, gold, different levels of exploration. We're looking for partners. We're looking to stake more ground. I think that personally, I'm really excited to be with Latin Metals and to see where we go in the next few years.
Good. Let's leave it there. These are maybe some things that we can do in the future. This is knowledge that we have about the decisions we've made, and we kind of assume sometimes that our shareholders understand what we're doing. Maybe that's not correct, and we should actually jump on videos from time to time and tell people what we're doing and why we're doing it. And so, yeah, we've covered off commodities today. Maybe we can cover off some of our individual projects in the near future.
Perfect. Well, Keith, thank you so much for jumping on the call today, and thank you for doing this with me. And thank you everyone else for watching. And if you would like to watch more videos on YouTube, please subscribe to our channel and follow us on social media and subscribe to our newsletter. Thank you so much and have a wonderful day.